Hey folks, Frank Zarilla here, August 17th, Sunday, midday. I wanted to give a quick meeting in regards to some weekly ideas for this week. Okay. Weekly ideas are great for people who don't have time to be in front of their screens every day, right? For work reasons. They're great for people who perhaps maybe are struggling with all the intraday action. They get emotional with stocks going up and down too quickly, or their P&L moving. The weekly idea just give you an opportunity to just put the order in and understand that nothing has to be done for the most part until the following Friday, right? Um, and as you know, every candle here represents 1 week, right? So there are a few stocks, three stocks actually, that I came across that I think are worthwhile. Number one is QUBT, Quantum Computing. This is one that we bought on the daily, but the stock still looks good. It's been trading sideways for about, call it, 2 months. Right, the high here is 1689. So in a situation like this, the buy stop will be above last week's high of 1689. Call it 1695. That buy stop should be good until this coming Friday. The stop loss, you should probably use a 20-week moving average. Call it $13.90, right? So what you want to do is, so that way you can make it as mechanical as possible, is that you take 13.90 minus the buy stop, which is roughly 16.95. That is $3.05, right? That becomes your first target. 305 plus 16.95. Your first target is $20 a share. What you can do at that time is very simply sell half and then raise your stop loss on the balance to break even. And now, unless the stock gaps down, you got a free trade. Even if you get stopped out, you're locking in a profit no matter what, right? So that's one way to do it, where you're taking the difference between your buy stop and your stop loss. That becomes your first target. That becomes your first sell order of half of it. You move the rest to the balance to break even, and then you start every single Friday, whatever, every weekend, to adjust that stop loss to higher levels. Another way to do it is that you go out there and you sell 25% at your 1R, which is $3.05, 20 and change, right? $20. You take 25% and you put a trailing stop, right? A $3.05, whatever the difference is between the buy stop and the sell stop, 305. You automatically put a trailing stop of 25% of your position, $3.05, right? And then that goes up with the stock price. As the stock moves higher, your what you have at risk becomes less and less. You can either do it in dollar terms, or you can take 305 divided by 1695, which is roughly 18%, and then put an 18% trailing stop. I like the percentages better because as the stock moves higher, it gives you more wiggle room. And these stocks, they move, right? So the key here is, number one, is to take some off the table, right, with a piece of your of what you have, trail some, so automatically you're reducing, right, your loss if the stock moves higher, and then hopefully that one piece that has that wide stop, 18%, will keep you in the trade for a long time. The other 50% you start adjusting week by week, okay? The next stock on the list is Bull, BULL. This stock, I bought the stock last week. This was on the daily, one of the daily ideas. I forget which day, but I bought the stock. Again, high here is 1641. Buy stop call is 1650. Use this 10-week moving average as your stop loss, which right now is roughly $13.59. Call it 1360. This stock on the daily, it's set up really nice as well. As a matter of fact, come Monday, this is going to be on my daily list as well. I'm gonna buy more if it goes to 1613. But either way, similar situation. We have an IPO. Here's the IPO VWAP. We've been hitting that IPO VWAP over and over again. 1, 2, 3, 4, 5. This stock traded a tremendous amount of shares here this week. 126 million, 105 million here, and 92 million right over here. This is a lot of volume for an IPO. So again, I like the stock going through 1641, buy stop 1650, 10-week moving average as your stop, and then the same scenario, right? do multiple sales, right? Trailing stop, one at 1x, and then move the rest on a weekly basis. SFIX, Stitch Fix, the stock's been trading sideways for 3 years, right? And what typically happens is you have a stock in the tremendous downtrend, right? And you see this white line here is a 10-week moving average. And what you have is institutions, they tell their traders, I need to sell this stock. The institution, it's a lot of stock. They sell every time it gets to the 10-week. They sell. And then what ends up happening is after a couple of months of just nonstop selling, as we see here, from roughly, call it $100 all the way down to roughly $10 a share. At this level right over here, not even $10, $5. At this level right over here, the stock finds equilibrium. Now you have the buyers and the sellers going back and forth, right? They found equilibrium. You have buyers here. What tends to happen here is that the supply starts to diminish slowly but surely at the very end of, before this gets resolved, usually to the upside. What you tend to see is a pattern of higher lows. One low and one low here, one low here, one low here, and one low here. At the very end of the base, you see a lot of contraction. And we kind of have here 1, 2, 3, 4, about 5 weeks right over here, really tight contraction. This stock, again, I went long this stock last week. It was on the list last week, but here, 507, buy stop, 550. The 10-day and the 21-day moving average, and even the 40-week moving average, the 200-day, they're all here together. The bigger the base, the higher into space it goes. The bigger the base, the more it trends. So I like to start going through 507. Again, I might buy more. I got to look at what kind of position I have, but it's the same thing, right? You got a stop loss at 430, which is a little wide. It's okay, right? You're looking for a much bigger move, and just sell some at 1R, right? At one risk. So if you buy the stock and call it at 510, stop loss at 430, that's 80 cents. That's roughly a 15% stop. You take 25% of your position, you put a 15% trail, which is what I did, right? On 25% of the position, you sell 25% at 1R, and then the other 50% every Sunday, right? You adjust your stop loss. All right, so the weekly ideas, they don't come around too often, but what you're looking for is you're looking for bases, right? The bigger the base, the better off, right? You're looking for bases that have been basing for a while. You're looking for tightness at the end of that base. And I'm using the same exact scans. I'm using the inside day scan. I'm using the NR7 scan. I'm using the down 3 weeks in a row scan. And I'm going through these names. And that's what I'm looking for. All right, so trade them well and be well. I'm going to put some examples underneath this tweet so you can see exactly what I'm talking about.